Hello, this is Monica Sawyer. Welcome to Real Estate Investing for Women, where we focus on all aspects of real estate investing, including strategies, mindset, emotional mastery, money smarts, and so much more to ensure your success. If you'd like to learn my personal favorite investing strategy, just go to blissfulinvestor.com. You can also listen to this episode on the Real Estate Investing for Women podcast on iTunes. Now, let's welcome our guest. Today, I am so excited to welcome back to our show my dear friend, Maureen McCann. She's been on the show several times before, and she and I were on a conversation on the phone about a week ago talking about sort of the realities of what's going on in the real estate market and all the mixed messaging that's out there, right?
Yeah.
And so, so Maureen and I decided we were going to come live and chat with you guys sort of on our perspective of what's happening in the real estate and what we might be able to anticipate. So I'm really excited to have Maureen back. But for those of you who have not yet met Maureen, let me go ahead and read her bio so you have a little bit of background on her. So Maureen is a co-founder and principal owner of Spartan Invest and operates as the VP of Sales and Marketing for this boutique-type real estate investment company. Spartan Invest is a small real estate investment company that specializes in providing investors turnkey real estate from monthly, passive, residual income. Yay! Maureen brings with her 10 years of sales and marketing experience in the turnkey marketplace. Having served as an investment property coach for years, Maureen is skilled at helping clients build turnkey cash flow portfolios for her clients. Maureen has helped hundreds of investors build the type of rental portfolios necessary to reach their short-term and long-term monthly passive income goals. Investing in turnkey real estate for long-term wealth generation is something Maureen understands intimately. Whether clients want to replace their current income with passive income or clients are simply looking to supplement their retirement, Maureen can custom design the right portfolio with the right end goal in mind. Hey, Maureen, welcome back to the show.
Thank you, Monica. So good to be here. Isn't there a lot to talk about today?
Oh my goodness. Oh my goodness. You know, it's so funny because when I'm out there, I'm listening to a lot of different podcasts to hear what everybody's saying, and we're getting exact opposite predictions and ideas and stats. And, you know, the thing is this, that there's no way to know who's going to be right. Predictions are predictions, and they're kind of, sometimes they're based on stats, but you can see we can get stats from all different places to support our predictions. So I just thought that it would be valuable for us to talk about sort of our perspective. Now, ladies, the thing that I want you to know, and this is something that I stay very aware of, is someone is going to be right, and we don't know who it is.
That's 100% true.
That is true. We don't know. And so Maureen and I are not here to make predictions. We're here to kind of give you a bird's eye view of how we personally are looking at the market today and what kinds of investing strategies we're making. So whatever it's worth, you can follow us or not, take it as perspective and take pieces of it. That's great. Understand, we're not trying to be predictive and tell you what to do. We're just giving you our perspective. Is that fair?
Fair for me.
Yay. Okay, cool. So Maureen, you and I are in very, very different markets.
Yep.
As far as where we're investing. So why don't you, and you had some great information on some studying that you had done. So why don't we just start there? Why don't you tell us what you're seeing out there in the world?
Yeah, thanks, Monica. I think it's, just on the ground level, I think it's important to just share what is actually happening in the real estate investment world in the market that I know, that I do business within and live and breathe every day, right? That's not going to be the same for every single market. However, I do have to say, a lot of the other turnkey operators that I spoke with, they've all said very similar things, that even amongst a pandemic, you would think that and the high unemployment numbers, you would then think that there is going to be an exorbitant amount of people that are not able to pay their rent. And And I do recognize that there are going to be a certain percentage of people, whether it's their homeowners struggling to pay their mortgage because they got laid off or furloughed, or it's renters that are not able to pay their rent because of the same reasons. Now, every market is different, right? So there are some markets that the overall GDP of the area is predominated, or is, I guess, yeah, that's the right word. It's predominated by the, as I say, predicated. I was like, it's a P word. I just don't know which P word it is.
One of those words.
One of those words. But it is dominated by a certain industry. And you think about, I think Las Vegas kind of comes to mind. So does sort of Orlando, Florida. These are markets that have a very high travel, tourism, hospitality-based economy. So they're the ones that are going to be more affected and more exposed to a pandemic like this. And it's not anything related to any pre-condition in the economy. It was simply, you have to close your businesses down. Prior to that initiative of the shelter in place and all businesses stop, the economy was roaring. The fundamentals are there, and they are still there. In my opinion, they're still there. They didn't go away. It was just close your doors until we figure out what's going on here, so we can blunt the curve and prevent the hospitals, the local hospitals, from being overwhelmed. Okay. So you've got markets that are really exposed to the effects of COVID, and then you have others that are very insulated. So what you were talking about earlier when you made the intro is that there's all of these varying opinions, and it makes sense because it's probably locality based. It's probably what they see in their own backyard. And this is where I think just sharing what it is that I see in my backyard, what you see in your backyard, it might be different, but it's all, and it can be contrasting, but it's also market based. So, and it's not overall. I think a lot of times you hear something or you see a headline and you make a generalization. This is the human mind, you make a generalization that it's the entire market. It's not like that. So, luckily, I can share that the markets that I'm in, these are not, Birmingham and Huntsville, Alabama, people are not clamoring to get on planes to go vacation and sip martinis by the pool at one of these markets. Mm-hmm. That's not what we do. It's more industrial based, it's healthcare, manufacturing, trade, utilities, banking, finance, technology, aerospace engineering. Yes, and there was some good news. We actually had a rocket that went up into the space, right? And so the Dragon made it up into the space. We've got 2 new astronauts up there doing some work at the space station. So that was like super big news, right? I'm sure a lot of that effort and work came out of Huntsville, because Huntsville is very much an aerospace engineering type of market. So I think what's relevant for this call and for the listeners is, number one, I would just say turn off the news. That's the first and foremost.
Yes.
Please do that. Please do yourself that favor, because I'm going to admit, I got stuck when this COVID thing first hit. I was so absorbed and consumed in watching it, and I just noticed my entire brain circuitry was firing on all negatives. Like, I was feeling down, I was feeling blue, I was feeling, despair, heartache, right? And if you have to remember that those news outlets are all about sensationalizing headlines to drive traffic, to get ratings, to monetize their stations, right? There's nothing wrong with it. You just have the choice to either tune in or tune out. And when you tune out, you realize that life is not as horrible or as doom and gloom as they want you to believe that it is, because they just want your attention. We have so much grasping for our attention that the most sensational headline is going to win. And they know it, because that's how our minds go. It's like you see a headline, you go, oh, I want to know what that happened right there. And the next thing you know, you're off track.
Right.
And so you lose focus.
Yeah. And I think what I've been telling people from the very beginning is that, yes, there are things you need to know. and understand that the news is yet another tool to help to keep you informed. The problem is that most people use it as a tool to get them depressed, get them freaked out, right?
Yeah.
You're not using it as a tool that supports you. And so what I'm telling everybody is, yes, get relevant information from news sources that you trust. Give them 10 minutes of your time. Get your executive summary and then move on with your life and live in the life that's happening rather than the life that they're talking about. Because you're right, there are so many interesting stories, there's so many curiosities. Most of that is designed to create an emotional response. And when you're talking about negative things, the emotional response they're going to get from you is a negative response.
Mm-hmm.
So you need to just manage that. This is one of our bliss practices, right? You manage what's coming in. So what I'm telling everybody all the time is be aware, vigilant, but stay positive. You
Mm-hmm.
have control over that. So I'm so glad that you mentioned that, Maureen. It's such a big key to staying sort of on top of this. And here's the other thing. With the pandemic, your immune system is your best friend. And if you are watching the news and making yourself depressed and upset and angry and hyper reacting, your immune system drops, it makes you more susceptible. So in a very selfish way, it's really important that you keep your eyes off the news that's not supporting you. Use it as a tool that's there for you to keep you safe. That's it.
I agree. So use it as a tool, 10-minute, get your executive summary, check out, get back, check into your life. Because
right.
as soon as I did this, as soon as I implemented that practice, Monica, then it was just like, for me, life was just normal. I was like, okay, let's just keep going. Like nothing was stopping me. And that's how I've been operating ever since. And the world has kind of responded in kind. And so I think what's important here on this call is that there are some things that are thriving during this there are businesses and people that are thriving through the pandemic. There are others that are suffering. There are businesses that have had to pivot. The really strategic, savvy business owners and leaders, when they recognize that their doors have to be closed for a particular length of time for a particular reason, some of them are sitting idle and they may not open back up. Others are pivoting and figuring out ways they can still provide value without having to interact. Whether it's, I can give you an example. My nail salon, which I'm not even going to show you my nails right now because they are horrible. I'm trying to keep them below camera so you can't see them. But I talk with my hands a lot, so, but the thing is, they couldn't open their doors for business, but what they did do was they pivoted, they got creative, and then they home delivered your nail kit. So the clippers, the nail files, the gel and stuff that you needed to do your nails. Because if you couldn't do them yourself, go into the salon, they're like, we'll give you all the materials. Of course, they're going to charge you, right? But as they should, because they're a business owner trying to stay in business. And this is a business that you supported and loved and kept going to, whatever it is, donut shop, nail salon, anything that you supported locally, they're trying to find a way to pivot to still serve you and provide value to you. Support them, right? I love that they, whether it's a pandemic or the 2008 global financial crisis, and then I was not in real estate in 9/11, but you've got these major life, and now this rioting situation that's going on. You've got all these major things that are going on, and there are businesses, it's true, there are businesses that are going to thrive and those that are going to suffer. And the ones that suffer, if they don't pivot, will go out of business. And the ones that pivot will stay in business and find new ways of doing things, right? And finding new ways to serve the community that they went into business for in the first place.
So talk to me a little bit about how that's actually affecting your markets. Like, are you seeing, I think a lot of the fear is that real estate prices are going down, people aren't paying rent, landlords are suffering, right? This is what we're hearing in the news. So, but what's really happening? I'll give you my perspective, but I know that you manage so many properties. So I really want to hear what you've got going on over there.
Yeah, so great point, great question. We do have 1,200 doors under management, and the biggest question that we were getting from everybody, including ourselves in mid-March when the shelter-in-place orders came, we thought, oh my gosh, how many of our residents are negatively impacted financially by COVID?
Mm-hmm.
And you don't really know at that particular moment, but it's going to show up through the percent of rent collected. That's when you know, right?
Mm-hmm.
And luckily for us, like, okay, so the shelter-in-place orders across the nation really went in place about mid-March, and we had already had the majority of the rent collected on those 1,200 doors. So we had seen that it didn't affect us in March. And I will give you a metric. So internally, we look at the end of 30 days, we look at the percent of rent that's uncollected. There's always a certain percentage, right? And you want to keep it under 5%, which means you got 95% of the rent for the month. Doing great, right? The lates and stragglers always happen. It's part of the business. They'll eventually catch up, but there's always a certain percent of the rent that's uncollected at the end of the month. So that was March. In April, it went to 7%. So only a small uptick. And we did an initiative where we sent out a survey to all of the residents, and we just said, hey, raise your hand if you've been negatively affected by COVID, you've lost your job, let us know, we want to help. And out of the 1,200 doors, we got 224 responses. Only 9 were able to support with documentation that they were laid off. Maybe there were some opportunists in there. I'm not gonna blame them. It's all right. Everyone's got to hustle, but you got to supply the documentation. Out of the 9, they legitimately lost their jobs. We helped them relocate and to find other jobs. We redirected their attention to find other jobs, and then we sent out an incentive to say, hey, if you pay your rent on time in April, then we'll deduct $75 off your rent.
Mm-hmm.
So we had 79% of the rent collected by the 4th day of the month. That told us that the majority of our residents were still being paid, they were still employed, and that our investors were protected, the asset was protected, the debt service would be covered, for those investors that leverage their properties. So we knew at that point we were in good shape. May, the same thing, the rent, we have a lot of the rent collected in the high 90%. So, again, this is market-based though, right? So if we were in Vegas, and I'm not there, I don't know, but I'm just making an assumption, just maybe makes that clear, right? Las Vegas is a place that is hospitality, travel, leisure based predominantly, right? Someone's coming to see shows in Birmingham, Alabama, or Huntsville, but they are in Vegas, right? So those are residents living there that the stimulus money is going to carry them for months, right? But they've got to get those doors open soon so people can resume work and get back to work. But we're not going to have the same housing problem that we did in 2008. We're not. I mean, and there are fundamentals behind my saying that. Number one is we didn't have the predatory lending or the subprime loans where people that didn't qualify were able to get into homes that they can't afford. And then the rates adjusted, the payments went up, and then they couldn't make the payments. That is not the situation here. We've got 60% of the 60% of U.S. Homeowners have it's like 58% equity in their properties. So you don't have that situation. Then you've got, there was the other statistic, I think it was, what was it? No, I think it was just the equity base. So it was there's a majority of majority of homeowners that have equity in their homes, so that you can access that equity to cover any cost or any sort of delay in employment that will cover you, right? My advice to anyone listening is this: trying to get access to your equity now is probably challenging for you, just because you have to wait in line, because many of these lenders, especially in the single family space, they're still liquid, they still have capital, they're still lending. Now I know the commercial space is a little different. I'd love to hear if you've got any insight on that or what you've been hearing, Monica, but most of that commercial side is private lending. right? And you've got equity groups and things that are lending to buy these big buildings. And so that I've heard through CoreVest, the CEO of CoreVest, that sort of has been stalled a bit. But there is free-flowing capital in the banks for them to lend to buy single family, but they are selling, or they are servicing those primary homeowners that want to buy a home first. If you want to refi, you're in line, you're second, right? So in a situation like this, I think it's really important to, if you have equity in your home, pre-pandemic, post-pandemic, just anytime, have access to it. Get the line, have it available to you so that if you need it, you have it at your fingertips versus trying to go get it now when everyone else is scrambling.
Right. And so actually I want to get a little clarity around that, because this is a question that a lot of people ask me. So is it getting an equity loan or an equity line? And let me just clarify what those two things are. Both of those are a second loan that go behind your first mortgage. Your first mortgage is probably how you bought your house, right? So the second is going to go behind your first, which is why it's called a second. But if you do a loan, or if you refinance and take a cash out to get some of that equity, you start paying interest immediately on that lump sum of cash that's given to you. Right? But if you do an equity line, it's like getting a credit card that's secured on your home, which means the rate's going to be really low. It's going to be closer to 3, 4, 5%, right? And you don't pay anything on it until you start utilizing that money. So there are different ways to utilize your equity. Now, right now, the banks are definitely lending, even if you get in line. When you're in line, it's a 2-month thing, not a 1-month thing, but it's still happening. Mm-hmm. Here's the other thing that's happening out there. Some really, really good things that you said, Maureen, that I just want to emphasize again, is that this is not like the 2008, 2009 crash. What was happening then is there were people getting loans that they could not qualify for based on the job and that they had, the circumstances that they had, and the credit scores that they had. What we saw just before this is that we were starting to get some of those loans back into the market that seemed the same as those days, right? And this is causing fear for people. We're starting to see the no doc loan, the low doc loan. You know, some of these loans that are, it's like, how can you give somebody a loan if you can't look at their tax returns? The difference is that they're still making decisions based on common sense. So you may be a low doc loan, but you have a multi-million-dollar business, right? You have a really good credit score. They're not just handing it out willy-nilly like they used to. So the basis, right? It's amazing what they were doing, right? I was in the mortgage industry at that time, and even I thought it was nuts, right? So it's interesting that now the foundation, the fundamentals of how banks are lending is very, very different. Even though some of the products sound the same, the fundamentals are very, very different. So as you're looking at the market, you know, Maureen says this so beautifully, and I've heard this many times, but I just love it. She just said it to me again. We can either go towards fear or we could go towards love, right? We can believe in security, or we can believe that the carpet's going to be pulled out from underneath us. And so look into your world and decide which side you want to see, because both are present, right? At all times. Mm-hmm. And so when you're looking at what the loan industry is doing, try to look at the pieces that are going to show you. I don't want to make this sound like, you know, pull the wool over your own eyes, but there is a lot of opportunity to view what's really good and what's happening on the bright side, right?
Yeah, 100%. And I want to add this, because this is stuff that I've been saying daily with investors, is that the opportunity, there is opportunity in everything, everywhere, all the time. It's just your perspective. And you could use this opportunity right now to contract in fear and then do nothing. And, you know, I think about the people back in 2008. if you had listened to the headlines, here's what's so contradictory is that headlines, news media outlets, it was like global financial meltdown, everything is closing, global economy is collapsing. I mean, I remember hearing those words, and yet my phone was ringing. My phone was ringing incessantly for people looking to invest in real estate. And what they knew, what those investors knew then, and what I know now with 100% certainty, is that real estate is not necessarily recession proof, like it's bulletproof, but it has certainly shown that it is recession resistant. And even during recessions, has increased in value.
Mm-hmm.
I have this nice little infographic here. 3 out of the last 5 recessions, real estate, don't look at my nails, it's horrible. Real estate has improved, has increased in value 3 out of the last recessions. There is so much literature in the right now circulating that, a world economist, global economist, companies like JP Morgan, Wells Fargo, are talking about how real estate is going to lead us out of this recession. So think about this. There's 2 thoughts I have here. Number 1, in 2008, I think we all realized that the U.S. housing market drives the economy. It does, period. Because we all saw it. Those little derivatives were packaged up, and those mortgage-backed securities they were sold around the world, right? And the whole world felt it when the U.S. real estate market, not to collapse, because I guess in some places it did. Well, I'll just use the word collapse. It's a better word to describe it. Collapse, right? And then everyone's panicking. So does that not tell you how important U.S. real estate is to the world economy? It's
Yes.
massive. Okay. Now, let's fast forward to today. We have the lowest interest rates that we have ever seen in investment loans. Prior to 2008, these loans were 7 to 8 to 9%. We are talking today, 30-year money is so cheap, it is under 5%. You're at 3 3/8 to 4 1/4. Of course, it fluctuates around every day, but you can lock into 30-year cheap money and get higher cash flow for the next 30 years because you locked into a very low interest rate. Your cash flow through a premium income generating property is dependent on the interest rate you lock in and the rent that you receive, right? And if you can get a high rent and a low interest rate, your cash flow is going to be high for 30 years. This pandemic will be here today. It's probably going to be here for a year from now, until we have some sort of vaccine or some better testing, better ways of preventing this from spreading, right? So it's short-lived, whether that's 1 year, 2 years. It's short-lived compared to the opportunity to invest in real estate that has been shown to be recession resistant and to still increase in value even during strange times like today, right?
Yeah.
So it's not a sales pitch. It's not me saying, hey, buy a product. It's just pointing out to you, the investor, the listener, the seeker of knowledge. How do you make sense in a world that is having contrasting views on all types of things? Monique and I are here just to share what we see in our backyards because we are in real estate 24/7.
Right.
And what I see is that here's the thing, I think this is the other key important point too, is that there are basic things that we all need as humans. We need food. So our grocery stores, they're crushing it right now as far as like their shareholders are probably so happy because sales are like through the roof, right? And so they're doing really well because you realize that's essential. Housing is essential. So no matter what is happening, 9/11, 2008 global financial meltdown, a pandemic, you still need a place to live, and you will figure it out. You personally and your renters, your tenants, your residents will figure it out too. They will figure out a way to pay because you need shelter. And I'd love to get your input on this too, to see if you've got any input on the multi-unit space. But I've listened to a few panel discussion where they've had single family folks on there with multifamily folks, and then build to rent folks. And when you now have to live at home, work from home, study from home, space becomes a really big commodity. And if you're living in a big box city, like if you're living in a high density city like a New York, or you're living in a high density building like a multi-unit, and everyone is home all at the same time, 24/7 for weeks, people are getting on each other's nerves. I mean, it's just the truth, right? And they want more space. They want to get out of those high density places and live in more spacious accommodations. Hence the reason we have been really busy, because you get stimulus money, and these are people that are probably still working, right? The first stimulus package was, if you make $75,000 or less, you're going to get a check for $1,200 per adult per household, and you're going to get $500 per child per household. Well, if you have a family of 4, 2 adults, 2 kids, you're looking at almost $4,000 coming to you, and you're still working. Does that give you enough money to move out of a box? It does, and hence the reason our e-leasing phones have been ringing. I have a 98.4% occupancy rate right now. It's the highest it's ever been. How crazy is that during the middle of a pandemic? That's real data. That's not made up. That's real data, right? And so what does that tell you? And when something like this happens, you're trying to figure out what is going on. And it makes sense that if you've got people in high density residences that are living on top of each other, and you work, live, and study from home, and you now need more space, you're going to go find it, especially if you've got stimulus money, or even people are still getting income tax returns, their checks, right? So all of a sudden you've got thousands of dollars, and now you can move. And the single family space has been, and this is just not me saying this, I've talked to other operators like me who I'm friends with, the same thing's happening for them too.
Well, it's interesting because I live in a condominium complex myself. So there are 45 units. We're all on top of each other. And it is interesting because we are, and I'm hearing this also. So I completely support what you're saying, Maureen, is that the single family home is like magic right now. People are really coveting that space. And it has always been that way, that the single family home is kind of, again, it's a foundational thing in our society. It's something that provides more of what we want in our homes than any other form of housing, right? It's why that market is so stable and so reliable, right? But even in my own condo complex, we have a lot of retired people, and we have a lot of young families, and we're all going up and down the elevators together.
Yeah.
And the older people are scared because the younger people are not wearing masks because they're not at risk. So they go into these elevators in these compact little spaces, and they're spreading their germs, and the older people on the fourth floor or whatever have to take those elevators down because they can't walk down the stairs, right? So you're actually seeing in real life how this plays out in a time like this. And what happens is people say, I don't ever want to be at risk like that again. Right? I want more room for my children maybe, or I don't want to be around germs of younger people. I want to be safe in a place that feels more protected. So I do also see that the single family market has continued actually to go up. Right? Now, if you look at, from my perspective, if you look at housing prices, the days on market is longer because people are having trouble going in and seeing places, right? It takes longer to shop, but prices are still either stable or a little bit up, right? If you look at high density, we are seeing that the prices are going a little bit down. They're still not plummeting, right? But you do definitely see a gap between the single family and the high density. So, and this is just the thing that I want everybody to really take in from what Maureen and I are saying. Use your common sense. Like, let's talk about common sense investing. There are lots of ways to make exciting money in real estate. And the true blissful way is to take a look at what makes sense and invest in that way, because that's going to be less stress. It's just like the stock market. If you invest in something that's really exciting and is going to gain 50% or 100% in 3 days, it also can lose that much, right? Mm-hmm. It's the same in real estate. If you're going for really exciting investments, you might make a lot more money, but when things go bad, they go really bad. So right now, the thing to do is really take a look at what makes sense in your communities. So I can tell you what makes sense for me and my community right now. Prices have stabilized. They're still really high. In lending, the conforming loans, so most of the country conforming is, what is it over there for you in Alabama? What's conforming for you?
We talking, well, there's the jumbo and then there's you're
just
talking
the basic conforming, Fannie and Freddie.
Oof, because I'm thinking that's more of well, I'll just speak to the investors. I mean, like 150,000,
right.
Yeah.
Right. And so in California, basic standard conforming is 510,000. Then we have large conforming, which goes to 765. And then after 765, it's called jumbo and max jumbo, right? So those are the tiers of lending. Everybody is able to get a conforming loan right now because they're backed by the government. They're backed by Fannie and Freddie, right? They're still lending. They're still giving you great rates. They're still not charging you a lot of points. Even for us, if we go into large conforming, rates skyrocket. The rate goes up by at least 1.5 points, and the points go up by at least 2 to 3 points. Points is what you pay up front to get that loan, okay? So, and it's harder to get those larger loans, but conforming, they're backed by the government, so it's easier to get. So now I'm shopping. Every property that I'm looking at is $1 million. So I can't get the loan that I want. The best that I could probably do with what I want to pay is 510,000. So what does that say to me? My market is not the market for me to be investing in right now, right? However, it is a good time to be investing in market where the loans can be Fannie and Freddie backed. They're conforming, right? So I might look, for instance, at Maureen's market or several other markets around the country that are giving you cash flow, that you can still get loans on those properties in conforming pricing, right? So just take a look around. Things may not be exactly what they have always been, but there are still opportunities. I wouldn't sit back and just say everything is horrible because of what you're seeing in your backyard. Okay, so I can't afford housing in my backyard right now, but I probably will in a couple of years. But what do I want to do right now? Because I want to buy something right now, right? So just look at really what's happening and make common sense decisions. Because in the end, it's those common sense decisions that continue to rise, like Maureen was saying. They're very, very resilient because they make sense. And people need those homes, right?
You just made me think of a client that I talked with last week. Vignay is his name. I won't give his last name, but keep him anonymous. But he called me and he said, so he was like super gung ho. He's like, Maureen, I'm ready to buy. Great. I was showing him some properties and then I got an email from him. He's like, oh, well, I talked to my CPA, my financial advisor, and they told me to wait and see, to sit back, to stop what I was doing and to wait and see. And I had to word it very eloquently. I wanted to tell him that that was really dumb advice from his CPA and his financial advisor. Now I get his perspective, as well as listeners now are thinking, well, she's just a salesperson. She's just trying to sell something, right? Because she needs a commission so that she can pay for her house or whatever. It's like, what was more important to me was to take some advice from someone that's a billionaire, like Warren Buffett, who basically said, when others are fearful, be greedy. And when others are greedy, be fearful. There's times where it's going to flip flop. Now, we are in a time of fear that is being perpetuated through news outlets and social media sites because it catches attention and headlines. And, when someone is net worth is in the billions of dollars, they have a mindset and experience that commands them to be able to say what it is they say. And then we, the layperson who's not the billionaire, has to look at that and say, why is he saying that? Why does Warren Buffett say, be greedy when others are fearful? And it's because of this. And I was able to convince Vignette to actually move forward with the purchase and not listen to and ignore the advice of people that he's paying to provide him a service, but they were doing him a disservice because they were not giving him the correct information, in my opinion, right? They are telling him to sit on the sidelines, wait and see. Wait and see for what? Until the interest rates rise and then you miss locking in at the 30-year rate, that you wait for the inventory to dwindle and you just get the leftovers of what other people picked through because they were the savvy investors that were jumping in that recognized the opportunity versus the ones that are going to go, okay, I'll jump in now after it's late and the interest rates are higher. And I've got to just pick out what's been picked over already. Right. And so I was able to just have a conversation with him and he used common sense. I just wrote this email to him. I supported it with some documentation. I mean, there was a cover story on the Wall Street Journal about how real estate is going to lift us out of the recession. I just sent that to him. There's a blog called Keeping Current Matters. They talked about how real estate was positioned to bring us out of the recession. So I just was like sending him I just sent him the information. And I was very eloquent in my, don't listen to your CPA and your financial advisor. They're not giving you good advice right now. And then he thought about it and he came back 2 days later and he said, you're right. I'm going to, continue on with my investment strategy. And I was like, good for you for not listening. Don't be a sheeple. Don't just listen to what, other people do and just follow blindly. Like use your thinking brain. Use your thinking brain, not other people's thinking brain to make decisions for you. Does it feel like on a guttural level? Does it feel like what I am saying, the information because the information that I shared was through economists and through, JP Morgan Chase and those types that were talking about real estate and what it was going to do for us here and the economy. And I just shared it. And I was like, look, make your own decision for yourself. Don't listen to the sheeple. Make it for...
So we all have a team of people that advise us on how to do the very best that we can in life. And our CPA is very definitively one of those people. But think about what the CPA is an expert at. The CPA is an expert at crunching numbers and staying conservative. Right? They are not real estate investors, most of them. Some of them are. Mine is.
Yeah.
Right.
And he's a real estate investor.
Right. If he's a real estate investor and he's successful at it, then you take his advice. But if he's an accountant and his very first knee-jerk reaction is to keep you safe, well, that's awesome. He has very, very good intention, but he's not educated to give you advice in real estate. You get advice in real estate from people that are actually successful in real estate. And you want to make sure that they're successful in real estate through good times and bad times, not just people that are flying high because they took a bunch of risks at a time when the market was just going up, like the last 10 years, right? So you want to make sure that you're taking advice from people that understand how markets move, understand how resilient real estate is in the right markets if you do your homework. Take advice. Never take advice for someone who is not where you want to be. When you're taking advice, make sure it's someone whose shoes you want to walk in one day. Mm-hmm. Right?
So true. Yeah.
When you're taking real estate advice, you take it from someone that can give you good advice based on their experience. And sometimes your CPA is that person and sometimes they're not. Sometimes your lawyer is and sometimes they're not. Sometimes your title company, sometimes your real estate agent, right? There's so many people that you have access to. The place where your smarts really comes in is choosing the people for who you're going to take advice for what.
Mm-hmm.
right?
So
So,
true.
yeah. So, you know, in this particular case, the CPA wasn't the best person to give him advice. You, Maureen, have been in this business. You've written a couple of cycles. You've seen what's happening out there because you manage 1,200 doors, right? So
Yes.
your advice in that situation is much more relevant. It doesn't mean that anybody's wrong or right. It just means what's more relevant and what's going to benefit you more, right?
Yeah, because I thought at that time, I thought, God, if he or anyone, says, I'm going to sit on the sidelines and wait and see, I recognize that they're missing an opportunity to lock in to low rates and high cash flow for years to come. I
Mm-hmm.
know it's going to benefit him. So I knew in that moment when I got that email from him, whether it was him or a representative of others that are, contracting and sitting on the sideline, I realized that it is about showing them the opportunity that exists today and to push out all of the noise that's scaring them into inaction.
Mm-hmm.
Take the action because it is going to benefit you and your family for generations, in a very, very beneficial way. And I, when you're passionate about something and you know that what you do in real estate helps investors build the wealth and the legacy that they want, sometimes you got to help them get the fear out of the way and get them to see and to think with their own mind, not with the mind of the collective sensationalists in the news media rooms, right? Trying to vie for attention, and just still recognize that there is still good and there is still opportunity and there is still ways to profit in real estate, through now we can say you and I have lived through a pandemic. You and I lived through the 2008 global financial meltdown, and real estate has been, in both of those. Now I can see it thrives. Real estate, the lending, the predatory lending in the subprime loans and the packaging up of the derivatives and then those sold globally, that was a systemic problem, not necessarily real estate related, but lending related,
Absolutely.
right?
Mm-hmm.
So what happened when the banks in the 2008, when the banks had to repossess all those properties, who came in and saved the day? The real estate investor. And what happened for them? I mean, I would love it to find a bunch of investors in 2008 that, bought as many single family rental properties as they could, because in February of 2010, Warren Buffett said that the best strategy at that point was to buy as many single family rental properties as you possibly could manage and just buy them. And I mean, my business exploded after that comment that he made, and it's still been going because he recognized then that single family rental properties, in 2008, you could get them for pennies on the dollar. The banks wanted to get rid of them. The banks were lending money cheaply to get them off the books because they had so many of them that if you actually bought and invested in many, many single families in 2008, I would love to see where they are in 2020, what their net worth is with all of the assets that they were able to purchase at deep discounts. Everyone thinks we're going to be at deep discounts now. No, it's
I don't
not
think
the
we
same
are.
environment. It's not the same
No,
environment.
no. Yeah, there will never be another 2008, 2009 type of environment, fortunately. I'm glad because that was painful for a lot of people.
Yeah.
But, so Maureen, taking action is such a big topic. So we've kind of talked about what the market is going to do. And so what I would like to do is record a show for the next week or the next episode to talk about rate of return and why it's important and how to take action right now. Because I think, I always say at the end of every show, take action, right? Because nothing happens until you take action. But people still don't really know how to do that. And they don't have enough information to keep them motivated and inspired to do some of those things that are uncomfortable in the very beginning. So, Maureen, let's have a conversation about creating a rate of return and creating wealth through real estate on the next episode. Does that sound fun?
Girl, I'm in. I got some good stuff for your listeners there. So they've got to tune in, because when I break this down on how there's 5 basic ways that real estate pays you. There's more than 5, but I'm going to give you the 5 basic ways. And when you see that and you understand there are 5 very specific ways that real estate pays you, more of you are going to want to invest in real estate, because it is such a long-term wealth builder. And when it pays you in multiple ways, you just need to see the formula and how it works. I'm going to show it to you.
Perfect. I love that. And just remember, if you do your homework and you get in markets where there's still jobs, and there's some stability and that sort of thing, you will see that real estate is very resilient. So that's kind of what I want to let everybody know, that in my opinion, and the economy could always prove me wrong, but in my opinion, there's never a bad time to buy real estate. And I just want to close with a little bit of a story around that. I bought a property in 2001, just before the 2001 crash. I bought it in January 2001. And the market just plummeted. I also bought my dream home, $1 million home, in 2008, September. And within 6 months, lost 50% of the value of my home.
Oh, gosh.
Yeah, ouch, right? That sucks. But the thing is that you don't actually lose money until you sell. And now, you guys, actually, you can see it in my free report. I put it out there. I'm totally transparent. So I'm not worth $10 million. Like if I had timed the market perfectly and paid perfect attention, as if anybody can do that anyways, I still have seen really steady growth and resilience in my portfolio to where I have enough millions of dollars that I could retire, right? And I made really bad decisions. I should have known better, right? So the point isn't that, don't listen to me. I don't know what I'm talking about. That's not what I'm trying to say. What I'm trying to say is, you don't need to be perfect to make money in real estate. But you do need to use your mind, get some good resources of people that you can listen to that are where you want to be, and start to take action, because the markets are resilient, and we will see that again. So that's just kind of what I want to leave you with. We're going to move on to the next show, which I'm really excited about. Maureen, thank you so much for joining me for this portion of the show. This has just been awesome.
Of course, girl. I always love being on your show and contributing to your listeners. I just love where your heart is. It's all about helping and contributing and helping people, helping women in real estate become those mega mobile #boss ladies that make money in real estate, because they just need leadership in the how-to, and you provide that. And that's why I love coming on to your show, because you show them the how-to. I want to be part of that. Thank you.
Yay. I super appreciate it. Thank you so much. I appreciate all the wisdom you offer the ladies. Like, I feel like together we're kind of powerhouses, and that's really fun.
Yeah,
yes. Okay, ladies. So be sure and tune in for the next episode. And until then, always remember, goals without action are just dreams. So get out there. We'll teach you how to take some action and create the life your heart deeply desires. I'll see you soon. Bye. I hope you enjoyed today's show. If you'd like to download my favorite investing strategy, just go to blissfulinvestor.com. See you next time.